Hello friends, this is Gaurav Goyal from Lamoksh Investments. Welcome to the October newsletter of Paisa Vasool. And we'll start with what we saw in the month of October, with American markets staging a huge bounce back led by Nasdaq, which rose by 6.79%, S&P 500 by 5.64%, and the broader Russell index by 3.19%. We also saw some corporate America doing exceptionally well in this quarter. More than 80% of S&P 500 companies have reported quarterly earnings that have beaten estimates. Corporate America is also expected to post almost 38.6% year-on-year growth, which is no mean achievement. However, there was some disappointment with the quarterly results of some of the larger tech companies like Amazon, Apple, and Facebook. But I think these disappointments were overblown, and we might see a big, huge comeback from these companies in days and months to come. Microsoft also surpassed Apple as the largest listed tech company in the world, and its market cap stands at USD $2.5 trillion. Tesla also rose by 44% in October, and its maverick CEO, Elon Musk, became the richest man on the planet Earth. On the other hand, Facebook faced whistleblower complaints and increased government and public scrutiny. As a result, it had to rechristen itself as Meta, and it embarked on a new virtual reality journey called Metaverse. The headline inflation also rose to 4.4% in US, which is a matter of some concern. Here we demonstrate the performance of Dow Jones Index, Nasdaq, S&P 500, Russell 2000 across time frames in last 1 year. So if you see the last chart, last 1 year, 1 year performance bar chart, you will clearly see that the performance has been exceptionally good. Most of these indices are showing returns around 40%, which is very, very good. On the commodity side, we have seen oil rising by a huge number. It touched more than $86 and closed at $83.72, clocking 7.1% gain in October. OPEC Plus is expected to maintain production cuts, but we might also see Iranian supplies coming in, and this might cool off the prices a little bit. Gold was largely flattish in October. The 10-year US Treasury had a roller coaster ride. It rose to 1.675% before settling it at 1.56%. We have seen a lot of volatility in bond markets, and this has in a way given some conflicting signals to investors, and this is likely to continue till the Fed meeting in the first week of October, where there may be some more clarity. Cryptocurrencies led by Bitcoins moved up after a significant fall in the month of September. Bitcoin rose by almost 48% in October. Some of the leading currency pairs against USD, Euro USD is at 1.15, British Pound is at 1.36, USD CNY is at 6.405, and Indian Rupee against US dollar is at 74.91. Here are the two charts. Both of them are showing a significant rise in the month of October. Brent on the left and Bitcoin on the right. So Europe has been equally strong. The EU 100 and EU 600 indices rose by 5.26% and 4.5% respectively. French and Italian benchmarks were up by 5.2% and 5.09%. China also made a mini comeback with 2.5% after significant falls in the first 7 to 8 months of the year. Eurozone inflation jumped to 4.1%, and this has led to some concerns. However, Christine Lagarde, President of the European Central Bank, thinks that this is transient. India, on the other hand, showed some pullback from a strong September, and it had underperformed most of the peers and the developed world as FIs pulled out money from Indian markets. They took out almost 25,000 crores from Indian markets. Domestic institutional investors pumped in money, but still the magnitude of the outflow by foreign institutional investors was quite high. So all the major indices, if we look at the October 1 number and the October 29th number, were largely flat, but it does not really show the true picture. And there was more of a huge rise in the first 15 days and followed by a significant fall towards the last 10 to 15 days. We saw Nifty pulling back by almost 6% from its all-time high that it recorded on 19th October, a level of 18,600, and Nifty Bank, which was the superstar of the month, it fell by 7% from its peak, which it recorded on 25th of October. And I say it as a superstar despite the fall. So what we have seen is in the last 15 days of October as quite frightening, yet we believe that Indian economy fundamentals remain intact. The corporate performance has been fairly good. There have been some concerns with some of the consumer companies wherein we have not been able to pass the rising commodity prices to its consumers, and there's been a shrinkage of operating margins in such companies. But I don't really see too much of worry around this. And these companies might also show better results in the next quarter. Meanwhile, Mr. Shaktikanta Das, the RBI governor, who has done amazingly well in his last 3 years of tenure, has been given an extension of another 3 years by Cabinet Appointment Committee, and this clearly reflects the faith the government of India has on him, and deservingly so, because he has really steered Indian financial sector towards strength. On the vaccine front, India crossed the auspicious 100 crore mark of COVID vaccine inoculation. On the policy front, one major policy initiative that the Government of India launched was Gati Shakti National Master Plan, which involves integration of 16 ministries and costs around 100 lakh crores. It involves synchronized decision making to create a world-class, seamless, multimodal transport network. So it all looks really good. So as far as Indian benchmark indices are concerned, these are the charts: 1 month, 3 months, 6 month YTD, and a 1 year performance chart. Nifty, as you can see, has done a 51% yearly performance. Nifty Bank has recorded 62% yearly performance. Mid cap 100 at 79%, and small cap has been the best performer at 84%. The 1 month numbers are all there. Longer the tenor, better it is. On the sectoral index performance, the last 1 month numbers wherein clearly the Nifty PSU Bank has been an outlier, a wonderful performer, rising by almost 14.5%. Nifty Auto also recorded 6%. On the other side, FMCG index fell by 5.5%. So if we try to look into the future and make some predictions, we expect that Fed in its in its November 2nd, third monetary policy meeting will announce tapering. There would be a plan, and it might indicate how much it will taper, and it might have its own repercussions on global markets. So we may have to brace for some extended volatility in coming days. The inflationary supply chain constraints and the commodity prices concerns will likely to continue in the month of November. Um, we have seen correction in Indian markets. To my mind, it's a very healthy correction and a welcome correction. Valuations, Indian equity valuations had moved up on the higher end of the spectrum, and little bit of correction, about a 6 to 7% correction from those highs, is clearly welcome. One-way linear moves in Indian equity markets are in all equity markets across the globe are never healthy, and that's why I welcome this correction in Indian market. We continue to remain bullish on equity markets over a long period of time. It's likely to outperform other classes, asset classes by a distance. We will do better than global peers and will be an attractive destination for foreign institutional investors. There was also the privatization of Air India, which took place in the month of October. It was sold to Tatas, and however, what it brings to the table is a reassurance to the investor community around the globe that government is committed towards disinvestment policy, and its intentions are clear. So the government overall remained on a fast track mode, and it announced several initiatives, including Gati Shakti project, as we talked about it earlier. We believe that Indian economy recovery will continue. We have a positive outlook, and I also feel that rating agencies will look at India favorable, and we might see an upgrade in Indian rating perhaps in near future. So as far as the portfolio strategies and performance of the various portfolios, uh, most of the portfolios that we run on small case, in fact, there are four of them, and all of them have done exceptionally well since inception. It's a limited time period that we have. We can talk about 6 month time period only in most cases. But if there is data to show that we have consistently beaten the respective benchmarks by a fair degree, and the charts in the forthcoming slides will clearly demonstrate this. This is Sun, which is basically made up of 10 to 15 securities from the large cap space, the top 100 companies in terms of market capitalization on Indian bourses, and its relevant benchmark is Nifty 100. You can clearly see an outperformance. Earth is um, across the whole spectrum of companies, mid cap, large cap, small cap, and it's made up of about 25 odd securities. And if you look at the performance of Earth, it's high quality portfolio, though derived from various uh, the full spectrum of companies, yet it's a quality portfolio. And again, you can see here that against the relevant benchmarks, it's done very well. Moon is more of a mid-cap, small-cap portfolio, and its performance has been electrifying since inception. It moves up and down more sharply than the other two portfolios, but overall, if you compare it with the relevant benchmark, which is the Nifty Small Cap 100, Nifty Small Cap Index, it's done very well. Galaxy was the new entrant. We launched it on 14th of July, and it's again done very well. So if I have to just share some numbers with you, Sun has risen by 37.35% since inception. This includes 1 month backtested data from May 6th, while it was launched on June 6th. against the benchmark, which has moved up by 19.78%, so almost 100% more than what the benchmark has done. Earth has moved up by 29%, while the benchmark there has moved up by 24%. Moon has given us almost a 40% um, performance since May 6, 2021, 6-month time frame against the benchmark performance of 24.1%. It's the best performing small case, but you have to also realize the fact that it's largely a mid cap and small cap portfolio, whereas the other two portfolios are from different segments. Is something to be noted. Galaxy, while the data is limited, it's done 51% absolute return against the benchmark performance of 12%. I will not talk much about it because the data is limited, but the numbers are there to be seen. So as far as our commitment is concerned, we are there for you, and it's all about trust. That's why it stands at the top of anything and everything that we do. Here's some of our philosophy in quotes, largely taken from Warren Buffett, Charlie Munger, and we believe in long-term fundamental driven philosophy, and that's what we really strive to choose stocks that are quality driven. Where there is good corporate governance, and it goes through grinding process selection, goes through grinding process, uh, goes through various indicators that we use in terms of ROEs and debt levels and a number of other things. This is a brief about me. I've spent more than 2 decades in the financial industry, worked with various institutions, passed out from IFT way back in 2000, and 2, 3 years back decided to do something of my own and became a SEBI registered investment advisor. Uh, and that's been the journey. So our brand name is Lamoksh Investments, and one can reach us via Gmail, YouTube channels. We are on Twitter, LinkedIn, and Telegram. So hope you liked the newsletter. We welcome any feedback that comes from all of you, and we hope to make you richer over a longish period of time. Thank you.